Let's get into 2026 crypto trends. What are they? What's not? I'll break it down for you. It's going to be a good one. Let's get started today. And I want to thank our sponsor first. And of course, that is BTCC, where you guys can start to get active on trading. This is one of the platforms out there. It was rated as one of the top exchanges to go with. You guys can join using our link and get 10% bonus on a first-time deposit. So check it out. There are some other benefits in there that are VIP badges. You've got some lower rates in terms of your trading fees. And of course, use our link. It does help us out. Let's get into it today. This is the first time back in the studio. For about a week, we were out. I was doing some home stuff. And of course, I want to get into the trends this year that could be brewing. And today I wanted to showcase Hartmann Capital. This is a company that we've looked at before, and a little bit about where they are going in terms of how people are actually making money in, I won't say crypto, but early stage tech, which crypto is a big part of. Well, how are you, Felix?
Hey, Paul. Thank you for having me, and Happy New Year's.
Yes, thank you. Well, hey, listen, you're the first guest this year in 2026, so you have started the roster off right.
Blank slate of topics to choose from. Amazing.
Yeah, for sure. We're going to have a lot of good stuff here to talk about. Let's get into a few points on, and notice a couple of things that you have been doing in terms of Hartmann Capital, changing your strategy up a little bit since we last spoke. I think it's probably been 18 months. What is going on with you guys now in terms of your portfolio?
Yeah, I'll give you the 60-second spiel of how everything emerged. We started as a crypto hedge fund, and since 2018. And as you remember, because this was a big theme for you, the metaverse became very big in 2021 in crypto. We looked at the metaverse, but the Web3 metaverse was a lot of smoke and mirrors that I called bullshit on essentially at the time, like the virtual land sales and so forth. And we said the real metaverse is things like Roblox, Fortnite, Minecraft, virtual reality. And so our first venture fund leaned really deeply into VR and gaming and these open virtual worlds. But it had to come from a user-first perspective, not just let's slap a token on, let's slap a blockchain on it, right? We're now on fund 2 of the venture fund, and we're really leaning in on saying, how can we use technology to essentially enhance humans? How do we become better, faster, smarter, stronger, better? And also make sure that we as humans don't become the bottleneck to AI. So that means, how do we enhance ourselves, whether that's with brain-computer interfaces, whether that's with smart glasses, whether that is with genetic editing, whether that's with robotics, whether that's with AI. And so that's been very much our focus on the early stage tech investing front going into 26 to 27.
That's bleeding edge tech right now. Obviously, CES coming up this week. There'll probably be a lot of AI integration. We'll most likely see some blockchain components that are applied to that. We'll talk about AI agents today. But before we head in that direction, are you guys holding any crypto tokens right now or is it just all VC equity?
So in the VC funds, we don't hold crypto. I mean, our venture fund 1 made crypto investments, and we had some big winners. For example, we were the first investor in Cookie 3, which is a company out of the AI agent Meta. And that one, even now after the bear market, is still 10x up, or at the peak it was 100x gain actually. Yeah. So that was one of the big winners out of the AI agent theme that we made from fund 1. But we still have the crypto hedge fund. And so with the crypto hedge fund, we are particularly focused around everything from real world assets, DeFi. The real question is, what can make money? Because I think the cat's out of the box, people have realizing that, look, you cannot just guarantee the kind of returns we saw in 2017 and 2021. Right. I think got trained almost to see that crypto is their escape hatch. It's their boat off the island where that's how they can make it big, right? Mm-hmm. But it was not, for a lot of people, it wasn't founded in the question of, where does the growth actually come from? I think now people are waking up that, look, we don't just get this guaranteed 4-year cycle, but there must be an actual buyer of last resort. And so who is the buyer of last resort? Well, we found out that for Bitcoin, there's a big enough thesis around digital gold. There is Michael Saylor, there is ETFs. The story for Bitcoin exists, but when it comes to everything else, we have to come back to reality. And the reality is the same way it works in equities. Eventually, the buyer of last resort is the company itself, its revenues, its buybacks. DeFi Llama, right? On their website, it used to be just TVL. Now their landing page talks about revenue, and revenue, earnings, all the buybacks. That is now what people focus on. And so I think it's an important maturing process that the industry is going through. And so even though 2025, and for what it's worth, ever since 21 has been kind of thankless for the alt world, I think it's a maturing process that the crypto world can come out of, whether it's in 26 or 27.
Back in 21, even 17, you could almost throw money at anything and it would probably go up. That is no longer the case. And I think if you look at the 2026 trends, one of the areas that I'm interested in right now, of course, is stablecoins. These will have a big impact across not only Wall Street, global economic scenarios. You see Wormhole in their news right here, getting in with national bank grade oversight. This, of course, coming in with Ripple and RLUSD. But are you guys bullish on stablecoin banking? And what would be the play you would be looking at right now? Circle, a publicly traded company, ETH, Aave, looking at what Visa's trying to do, XRP's out here with RLUSD. How would you look at the stablecoin market right now?
You mentioned some good ones. So I would say ETH is a very clean way to essentially make an entire industry bet on crypto at large, because one, if stablecoins succeed, yes, so too will ETH generate, even if a bank decides to build a layer 2 on top of Ethereum, there'll still be blob fees that go towards ETH.
Right.
So like ETH is kind of the general beneficiary of everything, right? Circle, I started shorting around 200. I covered it at 80. Now I'm kind of ambivalent about what happens next, but I think better than Circle is just Coinbase, because with Coinbase, you're getting virtually half of all of Circle's earnings, plus you have a custody business, plus you have a tokenization business, plus an exchange, a venture arm, everything, right? So I think Coinbase is probably one of the best juggernauts in crypto to kind of bet on, because you have the best of all worlds. Like even if you say, if you think you're bullish picks and shovels, Coinbase will win. If you think tokens will go crazy, well, good chance they will at some point launch a base token, and Coinbase likely also will own 20%, 50% of all the base tokens. So whatever way you slice it, I think Coinbase has enough irons in the fire that they can benefit from whatever meta comes next. I am a big fan of Aave. Of course, there's been some challenges lately, which again is part of the maturation process of the industry, where now there's a fight between the DAO and the original founder of where do the values flow? But the good thing is hey, at least we're having these conversations now. These important conversations to be had, but these were conversations that weren't even discussed 2 years ago, because back then the whole meta was more about announcements and marketing and whatnot. Now the question is really, hey, we want to maximize shareholder value, right? At last we talk like Wall Street. Like, how do we generate shareholder value for token holders? All to say, it has an incredible Lindy effect. It's been around, it used to be called ETH Lend, I think back in 2017. So we're closing in on 10 years of Aave. And it has, tens of billions in total value locked on the platform. I think it's ranked somewhere around it would be the 44th largest bank in the world if it were a bank. So, those are impressive feats to achieve, especially when sentiment is as low as it currently is, right?
Well, and it's also done a great job. Aave has done, we've had Stanley on before, and they've done a great job at partnering even with what you see on self-custody, because there's a lot of wallets out there that have started to integrate what Aave is doing. Back to your point, a lot of growth and extensions. So that's which kind of brings me
products. They even create institutional products that are compliant, right? Because they played the right games of saying, hey, how can we both win the degens, but also how do we win the actual institutions, right? And I think one more play I'll throw into that one is Maple Finance. I don't know if you've had those guys on before, but they've been growing tremendously as well, right? I mean, I think they started 2025 off maybe with $500 million in TVL, and they ended the year with closing on $4 billion or something like this. Where they
Sid's
closed
done a good job.
Yeah, incredible job, scaling a real business on chain essentially.
And I think what that kind of brings me to is the area of banking. And if you look at the classification of neobanks, this is like an example of the Web 2 neobank versus the Web 3 neobank, which was more towards self-custody. But you're going to see, and just to the point I was getting at earlier with Aave, lending and borrowing, DEX integration, perp DEX, obviously prediction markets also probably playing into that. What do you think about that? Do you think when the Clarity Act comes through, who is going to benefit it from the most? Would it be something like a neobank, TradFi? Do you think it'll be DEXs, vaults, wallets, Uniswap? What do you think? Clarity Act.
I think it's the underlying infrastructure, and it would be TradFi. And I say this because I think neobanks were willing to bend the rules before already. So there was a bunch of neobanks in 2021 that were staking money even on Anchor Protocol and then got caught, that they lost money on Terra Luna. So I think neobanks, they're probably bending the rules already. On the flip side, they're probably much faster to adopt. So whenever they get the green light, they got younger dev teams, they got younger leadership. They will say, we're going to embrace this and we're going to embrace it fast. Crypto apps, unless they become banks themselves, will probably not stand the most. And I say this because over the last 5 years or so, I think the amount of actual adoption of self-custody has been very minimal, right? It's still the same cohort of people trading on Uniswap directly. Mm-hmm. It's the same cohort of people, flipping money, meme coins, hyperliquid, and so forth, right? We haven't net like onboarded the next 100 million people, say, that are natively using crypto. But we have onboarded an incredible amount of people that are using crypto and blockchain without knowing it, right? So, for example, I think Polymarket was an amazing example where even in 2020 already, I was betting on the election between, back then it was like Trump and Biden. Even friends of mine that had nothing to do with crypto were using Polymarket, and they were using USDC. And so I think that is the kind of way we're going to see crypto adoption happen, where banks and neobanks will use blockchain in the back end, but you will not be signing MetaMask transactions. Yeah. So I would say I'm bearish on some of the wallet interfaces. The fact that like every transaction is signed and it's so cumbersome, and you make one mistake, you lose all your money. Mm-hmm. That's just not ripe for mass adoption, right? And so that kind of goes in the face of blockchain itself, because then you get rid of the whole point of self-custody. But at least there is also efficiency gains that blockchain does bring to the table. So I'd say for 2026, and also this whole meta of Clarity Act and like the regulatory breakthroughs we've had, I would say long blockchain for efficiency, short blockchain for what it actually stood for, which is the self-custody and so forth. And then the only caveat to that is that there's a sub-segment, which is the whole privacy coin segment right now, where you either embrace all of it or none of it. I think that's kind of what I'm seeing now, where, look, most people aren't even self-custodying Bitcoin anymore. So that kind of defeats the point of Bitcoin, right? But then again, like with Zcash forks, or, yes, it's provably scarce and it's proof of work, but there's quantum risk, right? So then that also defeats the purpose. So if you can have an asset like whether it's Zcash, Monero, and so forth, I would think the people that came to crypto for those cypherpunk values will start flocking towards those points. Those that came for efficiency, they're probably going to go towards ETH. They're going to go towards Solana. They're going to go towards wherever banks can save a buck.
Let's talk about tokenized stocks. Public stock. This is tokenized public stocks. You look at the growth here right now. You can kind of see some of the explosion that is happening. And the interesting point behind this, if you think about KYC on TradFi versus something like open X stocks, do you think that could see, because I mean, if you look at X stocks, they're continuing to grow somewhat parabolic in comparison. Do you think that will be the route for new investors to jump into publicly traded companies on something like a tokenized stock for the future?
I very much think so. Like, that goes back to the point of Polymarket, where people will be using blockchain infrastructure without knowing it while trading their favorite stocks from an app. Where there might not even be actual underlying stocks. They might be perpetual futures. We don't know. I do think there is a real use case for that, particularly because a lot of global markets just don't have easy access to American stocks. I'm, for example, natively German. I know that DAX was for the longest time just flat for maybe 20 years, didn't do anything. So you could invest in German stocks. You make no money, right? Yeah. Meanwhile, America's booming, right? On the other hand, there are, of course, emerging markets where maybe sometimes the markets they rip and they go nuts, but at the same time, it's built on a fragile economy. So how do people get access to quality assets? And then you take it one step further, you say, maybe you have global access 24/7, even before the IPOs, right? So I think there's a lot of people that would love to trade SpaceX right now. They would love to trade OpenAI. And there are ways to do that where you don't even need the underlying, because again, it could be a derivative. I think those two tickers themselves would likely get more volume than virtually most stocks currently publicly traded.
Yeah, for sure. Well, Robinhood did a good test in Europe with this, and I think they're going to obviously blow this up here in the United States. Additional to stocks, I'm looking at the data coming in on these vaults. This is a good example. This is from Token Terminal. This is Steakhouse Financial's vault. This is the one on Morpho. 1.45 billion in deposits right now, up 600% on last year. So Steakhouse Finance, for those of you who don't know, this is the underlying instrument that basically handles loans and also the growth of what we've seen within the Morpho market, which is available now inside the Coinbase app. What about vaults? Do you think we reach $1 trillion?
In 26?
Yeah.
I don't think $1 trillion in 26. My guess is that probably taps out in the low teens. So maybe like the 15, 20, $30 billion. Also just looking at, what is everything outside of Bitcoin and ETH worth. To get to $1 trillion, you will need proper institutional adoption, meaning you will need a major bank saying, I am depositing $150 billion into this contract, and you need pretty much 4 of those people, 6 of those people doing that. So I would say
it might happen. You never know.
It might happen, but
we may get institutional.
I think if we reach, so right now I think DeFi Llama says we have like $140 billion, $120 billion in TBL across all of DeFi. I think if that number grows to 400, I think that's a big win, because we've been stagnant, we've been suffering underneath the all-time high of 2021 for quite a long time. So I think if we can hit, getting close to $500 billion, that's already a huge win. 400 billion, already a huge win. And because all that will probably be monetized, right? So if there's 400 billion, I don't know how many bips that flows through into value towards underlying protocols and so forth. But I would assume if we can hit 400 billion in TBL, total crypto market cap excluding Bitcoin would likely also at least double.
So, all right, so we're sitting at 3 trillion right now on total market cap. You feel like we could see a 6 trillion market cap by end of year?
Excluding Bitcoin. Excluding
Bitcoin. All right.
Because I think its own machine,
That's a pretty significant amount. I mean, obviously, that would be much better than what we've seen in 2025. So again, this would be a very bullish 2026, which a lot of analysts are talking about right now, is that this seems to be an 8,000 S&P in the cards. And if that is the case, to your point, that could be very good for risk assets.
There is some form of bubble, obviously. There's some mania when it comes to AI. But there are, I think, 2 things to come to terms with. I think number one is we have this massive debt bubble, and we had the hope of austerity with Doge, and that failed epically. So austerity is out the window. And Trump is not the guy to raise taxes. So that puts taxes out the window, right? We tried tariffs, and tariffs made, I think, give or take $250 billion, right? And I think we run a $2 trillion deficit. So that scratches the surface. You're really left with 2. One is monetary debasement, or letting the debt bubble pop. Either way, the dollar fails, right? It's that simple. Like either you debase it slowly and painfully, or people realize I can no longer trust lending money to the US government. And yes, that helps crypto, that helps Bitcoin, but also it does buy time for every tech stock in the world, because that means what do you want to own? Cash that loses value, or a productive asset that generates revenue? Because no matter where we are as a society, like we're still going to buy food, we're still going to buy phones, we're still going to spend money on services. Like revenue will continue happening. Now, of course, it's flexible, meaning maybe the PE ratios are too high, but maybe you have to ask the question, why are the PE ratios so high? Maybe because people realize that I rather overpay today than get stuck with dollars, which will continue to go lower. The underscore for that is you just look at the price of gold and silver. Right? Yeah. There's clear signs that things are breaking. People are waking up that this is no longer the libertarian or the silver, the tinfoil hats. It's like, no, we're actually now within shouting distance. We will see this probably within the next decade. So how do you set yourself up for success? And there I'll push one further and say, so then maybe the craziness around AI actually makes sense. Maybe it's because we realize that is our only one true shot on goal to solve this problem. Because maybe if we make the right investments in AI, we get the right productivity lift. Productivity lift means we get the right GDP lift, where we can actually claw our way back out of that problem. And maybe it's even okay to right now spend the dollars and borrow those dollars that will not be worth anything 10 years from now, and leverage them to enhance and ensure US hegemony 10 years from now. Yeah. Because that AI progress will be so much worth more than the dollars will be worth 10 years from now.
But one thing that has been, here recently uncovered is just the amount of immense fraud, and what we're seeing is just all over the place. So, if that were somehow controlled or at least curbed, which it should be, I mean, that's the number one thing a government should be able to do, is figure out where it's spending fraudulently. That in itself may end up helping a little bit, at least into the point of extending the life of what we could see around dollar debasement overall. This is getting a little political, so I want to bring it back in a little. I'm going to bring it back in a little bit on valuations and where that's going, because one thing that is potentially in line here, and that could be tokenized assets. Now, we've already talked about RWAs. What about tokenized collectibles? So you got Logan Paul. I want to play this clip for you, and this could be one of those things that maybe level sets the market on this. Let me go to this clip real quick.
Yeah, let's see it.
Superman.
Oh my God.
The one of one.
The most coveted card in the world.
Ken has been chasing me for years, trying to convince me to sell this card. But I made my decision. He gave me the money. I'm sure eBay wouldn't be happy with that. Contract signed. And my guess is we probably won't see this for sale for another couple decades.
So the 30th anniversary of Pokemon is in February. So right now it is planned to go live the second week of January.
Pokemon has delivered higher returns than the stock market in the past 20 years by upwards of 3,000%.
Collectibles as a category right now is an asset class. They did not grow up, dreaming about owning a big art collection. To them, owning the best of the best, whether it's a Pokemon card, that is what they aspire to be.
Do you feel like there is an opportunity for this in the future in terms of tokenized collectibles?
I would think about this in two ways. One, you treat it as a collector, meaning you actually care about the thing you're collecting, and then you collect it and you don't care about the financial value. Option two, you have to treat it like a trader, not like an investor, because when an asset doesn't create any fundamental value, all it is a question of supply and demand, right? Mm-hmm. And so, supply and demand changes, right? So the interesting thing about Pokemon, I read about this essentially, is the kids growing up with Pokemon in, like, for example, I was born in 1995, right? So I grew up watching Pokemon. I had the Game Boy Color. I played the early ones. I got their first generation card sets and so forth. Now we're old enough that we have the money. And some people might, some kids, well, not kids anymore, now some millennials, age 30, 35, have enough cash. They say, I always want to own these Pokemon. I can finally afford them. I'm going to buy them. And so all of a sudden, and they want the first generation. Why? Because that's what they grew up with. That's what they know. They don't even know the new ones, right? So these early generations have limited supply. And now we've got an increased demand from a generation that suddenly has more money, because in the past they asked mom and dad, hey, can I have $10 to buy a booster pack? Now they have a paycheck coming in every month and they can drop hundreds of dollars. That doesn't mean that these are perennial assets that, like, 100 years from now, the Pokemon card will be worth more. It's also very possible that maybe 40 years from now, nobody cares about Pokemon, right? So I would say treat collectibles as a trader or as a collector, nothing in between. Yeah. Because there, again, to be an investor, there must be actual fundamental value being generated.
I would agree to a certain extent on that. Obviously, you get into different kind of collectibles. You get into watches, fashion items, things like that, different kind of scenarios or different markets in general. But tokenized assets moving to collectibles will be intriguing, because it's been, we've talked about it for 5 years and it hasn't really happened. Will it happen in 2026 is the real question. Is this one of those key pivotal points where if this card goes off the hook at 5 million plus, could, now Patek Philippe reconsider how they're producing watches? Could you have all these different kind of true collector assets, including artwork, started to move into that? I'm just kind of curious if you think
the main benefit is accessibility, but there's quite a tremendous amount of potential downsides or risks, let's call them. There's a lot of, I think, fraud risk. And I think there was actually an issue with Logan Paul that he had a tokenization platform and he tokenized an asset, but then he separately sold them. Those are questions that still need to be answered. But otherwise, the number one beneficiary is accessibility. Fox, if you mentioned art, right? Like if there's historic, if there's a piece from Leonardo da Vinci, can a regular human that is not Louvre, invest $1,000 and own a piece of Leonardo da Vinci? In that case, I think that makes a very realistic asset class.
I'm looking at the Courtyard chart right here on Dune Analytics, and that's the pink, bar right there. That's the growth of the market right there. So coming from where it was just in October of 2024, just to show the potential here of what kind of revenue is coming back into this. And that's, of course, Courtyard, which is one of the biggest, platforms out there around this. I want to jump over, I know this is getting a little bit long here. I want to jump over to the topic of gaming, because I know you guys have kind of repositioned your analysis on gaming in general. If you look at top gaming chains right now, what would you say is number one? You've obviously seen this market for a while. I know you're not necessarily active investing in it, but what are your thoughts right now on gaming chains?
I think the truth is there are none. It sounds aggressive, but there are none. So like I've talked to a lot of like strong games teams, meaning the actual games, the game developers that make the games, that have talked to a lot of these chains. One, a number of the chains have pivoted away from games because it worked with them and then actually quit and pivot away from them, meaning they got a grant and they said like there's no benefit of working with IMX. And so my bet really when it comes to Web3 gaming is much more so that it will originate from a game team than from a chain, meaning a team will realize, hey, this is a really sensible way to use crypto and Web3, and we're going to integrate it because it makes sense for our users, than it is for a chain to say, okay, we're games chain, everybody come build on us. Because I think the only way crypto, Web3 gaming works right now is in a gambling sense, which also, of course, has been very much the case for a lot of Web3, right? A lot of it is around like trading, it's about making money and so forth. And so the early instances of like Web3 gaming working is around, can somebody make money betting on outcomes in the game, playing game and so forth. But the reality is, we saw like Axie Infinity, for example, try the most simplest iteration of that, which is like play to earn. And while they do have some traction, Southeast Asia, and maybe they've built some IP and brand, we certainly can, with confidence, say that none of these Web3 games have become mainstream hits, right? Yeah, I think I watched one of your videos from 8 days ago where I mentioned, we've got GTA 6 coming out next year, right? And so the real gaming world, I think, is moving, funny enough, in the right direction. And funny enough, the real gaming world is moving towards decentralization, but it's just not on blockchain yet. 10 years ago, it was pretty much all centralized independent titles that big studios owned. And today, the whole meta in gaming is pretty much distributed. On one hand, you've got the platforms like a Roblox, a Fortnite, where kids can build games now and earn money building these games, right? And the more players, like they get the distribution on the platform, right? And the more players come, the more money they make. Now, you take it a step further, and now there's this whole, the whole genre of something called friend slot, right? Which essentially is these games that maybe a studio can make for $100,000 or less, right? But they're party games that are entirely, they're very viral. Like, for example, Are We There Yet? Or these games that you can just jump in for 5 minutes and play with a friend. And some of these games have made $30 million plus, right? So again, but it kind of goes back to this whole distribution meta, the distributed nature meta of like decentralization, where now you actually have small teams when you actually have individual devs build on networks and ecosystems and win. The piece that's missing, of course, the last bit is the blockchain aspect and tokenization of assets. And I think that will come, but I think we essentially put the cart in front of the horse and kind of did it the wrong way around. We said, okay, we're gonna build all infrastructure first, and then we tried to plug in something fun in a game here. It was actually, in my opinion, the other way around from the start. You start with something fun. You start with distribution. You start with people actually having eyeballs on your platform. And then you move towards distribution. There's a trend that is slowly happening that was unthinkable before, which is one, app stores are slowly lowering their prices, right? So for example, Roblox has actually increased the revenue share that their developers are getting. In the past, we were used to it going the other way around, where like over time, developers get less and less and less and less. Now we're going the direction where even including, the lawsuit between, I think it was, Epic and Apple, right? That, for example, I think in the EU, like you can get around paying the store fees. I think we're migrating towards these network states for metaverses, and these platforms, whether it's a Fortnite, whether it's a GTA 6, which also will have their own open world and UGC network, right? Will probably start tapping into blockchain. My guess is by 27, 28. So like that's further out. To me, that is the path of how Web3 gaming will all of a sudden look like an obvious hindsight thing, where we're like, oh, wow, we just stumbled into it. It's not that, we built Illuvium or Axie and it became the world hit. It's more so that one day you'll wake up and there are NFTs in GTA.
In Roblox, Yeah. Well, and I think maybe Roblox is the route. I was looking at this survey question on Roblox. Would you still be earning money from other interactive experience related work if not for Roblox? And you can kind of see that everybody's kind of saying it's all built on the potential here of where, and that just shows you the power of some of these IPs, to your point, going forward. Felix, I know you guys are into AR, VR. You look at what is happening over there with CES getting ready to, here's XReal, they're getting ready to drop something huge. It looks like it's coming just in another day or two. You look at Meta and how they've really started to move in on virtual, really kind of on virtuals itself. Let me see if I pulled up the Meta article. So they're buying this AI startup, Manus, which is kind of a virtuals knockoff, we'll call it that. What do you think about this? Do you feel like AI agents, Meta, what they're doing in terms of a strategy, what XReal is doing in terms of hardware? Talk to me about trends you see coming out for 26 in this area.
We're very big on smart glasses. I got the Meta Ray-Ban displays here, and these are what's called the realities. It's a small company. They're much lighter, and they don't actually have spatial. They just have text. So essentially, it's almost like having you can have lines of text on here. But the interesting thing is that what I start seeing happening in 2026, and we've made one big bet on this with a company called Mentra. They came out of Y Combinator. They're building the first operating system for smart glasses. Is smart glasses really are the AI co-pilot for humans. And so then you go away from the game side and say like, okay, so let's talk about entertainment. It's not about like what's called projecting movies on my glasses. It's more so about they should disappear in your day-to-day more or less, right? Like you wear them, you don't even think about having a device on your in your head. Instead, as we're having this interview, for example, your glasses would maybe show you interesting facts that relate to things we're talking about. Or they might even suggest a question that they think would be like awesome to use next, right? So the point is not to steal you away from base reality, but rather to really enhance it. For the first time, we're actually there where the technology is ready to be mainstream, because it goes back to everything from battery life. So for example, the new Mentor glasses, they last 16 hours, right? Where now you can actually wear glasses all day long. Or it goes into things like weight. There's actually studies that like glasses need to be below 40 grams on the bridge of the nose, because otherwise you get pain, you get headaches. You can see, right? And the problem is a lot of these Meta ones, they're quite large, right? I think they're still like 80 grams. They're quite big, and so you can wear them for hours. And the problem is also the battery dies. Like I was in Patagonia last week, and I was like filming some cool action stuff, but they would always die. And so I think the companies that prioritize smart design, not like all the features, but like, can these glasses last 16 hours? Can these glasses be comfortably worn all day long? And then can they do things that actually enhance my life? Like, for example, real-time translation, captioning for the deaf and hard of hearing, maybe an AI co-pilot that gives you interesting ideas when you're having conversations, right? So, and that stuff will be shipped this year. In fact, you can already test them yourself on several of these companies, whether it's Mentra, whether it's even Realities. That stuff I'm very, very excited about, because I think that will be the first time XR will have its mainstream moment, because VR had this habit of kind of getting viewed as a console, right? Like you have it like you have an Xbox, you have it like you have a PlayStation. But I think 26 or 27 will likely be the year where you will see people walking down the streets wearing smart glasses in a much higher count than we've already seen people wearing the Meta Ray-Bans, because the Meta Ray-Bans were already a cultural moment where people realized, whoa, I want to leave if I have to choose between regular Ray-Bans, Meta Ray-Bans, I'll choose the Meta Ray-Bans because I get extra functionality. We're tapping into habits that people already have.
Last question. What's the number one mistake you see investors making this year? Last year was probably not selling Bitcoin at 126.
Yeah. I would say, so since this channel is very crypto heavy, I will make it crypto specific, which I think is the biggest mistake crypto investor will make in 2026 is holding on to old belief sets. What I mean by that is crypto's full of these rule of thumbs, whether it is the 4-year cycle, whether it's the halving, whether it is, first Bitcoin goes up, then ETH goes up, then the alts go up. Like, there's all these memes almost around investor wisdoms in the crypto space. And the very hard thing to get through is that, like, yes, they have been true for maybe even as much as like 8 years in a row. I know things that were true in 2017, they were still true maybe even until like 2022. But it is a different market now. And you can say that because a market is nothing more than the collective of its participants.
Yeah.
And we can obviously confidently say that the participants have changed. So it is not one of those, but this time it's different. No, like, you just look at who is the collective people putting money into this market. If they are firmly different, right? If they're institutions, if they're Wall Street, then the market will also behave differently. So, I think a lot of people have a hard time, for example, letting go of losers, right? Where they say, well, I'll sell it in this very weird behavior that people have. They buy an asset, they will write it down 90%. They say, like, I'll buy it when it gets back to break even. And maybe that the asset was actually then great and keeps going on, but like this, they have the sole mindset of, I sell it when it gets back to break even. The truth is, you might be getting back to break even much faster with a better asset. Yeah. So I think it's a new year, clean year. Probably should have done it like a couple of days ago when it was tax loss harvesting time.
Yeah,
but at least it's still too early. It's still early enough to say, like, hey, let me actually understand every line item in my portfolio. What do they do? Do they make money? How is this going to get back go back up? And if I can't explain how it's going to go back up, other than I hope the Fed prints money, or there's going to be or market beta, that is not an investment strategy. There must be something. Not a
strategy.
Correct.
Hope is not a strategy. I love it. Felix Hartmann coming in from Hartmann Capital. You guys make sure and give Felix a thumbs up and also some comments down below. But Felix, thanks so much for coming in today. We appreciate it.
Thanks so much for having me, Paul. Have a great new year.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.